Hello guys, welcome back to my channel Commerce Insight. So today we are going to learn return on equity, return on investment from chapter 5 Business Arithmetic, grade 12 Entrepreneurship. So in the previous video I have given a question to be worked out by you, and the question goes like this. P runs an online business and the annual demand of the business is 16,000 units. Annual holding cost is 48 rupees and the cost of placing an order is rupees 1,500, and calculate TOQ. So everything is direct. So annual demand is 16,000 units, ordering cost is 1,500, carrying cost is rupees 48. All you have to do is to substitute into the formula and you will be getting the answer to the question. If you're having any doubt, please do take a screenshot of this particular answer and please work out on yourself. Now moving on to the today's topic is return on equity and return on investment. Now return on equity, the formula of return on equity is net income by equity into 100. It is in percentage. Now return on investment is net profit by total capital invested. Total capital invested means equity plus borrowed plus then preference shares. If there is preference shares in your question, that also. So that is net total capital invested into 100. Now net profit means net profit after tax. Now why we are using net profit after tax is because ROI aims to measure the overall profitability of investment that considers all the expenses including the taxes. By using the net profit after tax, you get a clear picture of actual return generated by the investment. So that is why net profit after tax is being considered. Now for net income, net income means net income after the tax, profit and tax. Why we are using net income after the tax? Because it shows how much profit a company generates with the money that shareholders have invested. So that is why we use net income after tax and interest. So this is the explanation why we are using net profit after tax and interest and net income after tax and interest. Now moving to the question. This is the following figures that has been extracted from a balance sheet of S Limited. Now they are having net profit 2 lakh, net profit before tax that is 2,80,000, total capital invested that is owned fund and borrowed fund total is 4 lakh rupees and owned fund is only 1 lakh. Now, what is the formula to find a return on equity? Net income by equity into 100. Net income means profit after tax. Why profit after tax? I already explained it. Okay, so net income is net profit after tax. So what is net profit after tax? The amount is 2 lakh. 2 lakh divided by 1 lakh in 200. So what is the return on equity? That is 200%. I hope that is clear. Now again I am explaining. Net income means net profit after tax. Why net income after tax? Because it presents the actual profit that is available to the shareholders after all the expenses including tax have been deducted. So that is why we are using net profit after tax. Okay, now what is the formula to find the return on equity? That is net income by equity into 100. Now our return on equity. So equity, in the name itself there is a equity and equity is coming at the last. So in the formula also net income by equity will be coming as the denominator. Now return on investment. Investment means amount invested into the business that will be owned and the borrowed. So since I is coming at very end, so I'm giving you a shortcut to remember if you're forgetting. So I is coming in the very end, so this I will be taken as denominator. Same way goes for the EES equity. So equity will be going as the denominator. I hope this is clear. Now the question here I already explained. I hope there is no doubt. Now moving on to the next question. Now The following relates to a newly established restaurant, The Breakfast. So the total capital invested is rupees 60 lakh, out of which 40 lakh is a bank loan at a 20% premium, and profit after tax is rupees 8 lakh. Calculate return on equity. Now you are asked to calculate return on equity. Again, what is the formula to find return on equity? Net income by equity into 100. So first you have to list out what are the items given. So total capital invested is rupees 60 lakh and loan is 40 lakh. So what is own fund? Own fund is 60 lakh minus 40 lakh, that is 20 lakhs. So the own fund is 20 lakhs. Already we have interest. Now in this question we don't have to find interest separately, because as I said, net profit is net profit after interest and tax. We always take net profit after interest and tax only. Now already we are having net profit also after tax. It is already given the amount, so you don't have to calculate separately. Some of you will be confused, since interest 20% is given, you may calculate interest on capital invested or loan, so you need not to do anything like that. Okay, so I hope that is also clear. So everything is given in the question itself, and there will be some confusing factors, because for finding net profit you will be finding net profit after interest, so you will be finding the interest, then you will be minusing it from the net profit, like that and all. You don't need to do anything like that. So what is the net profit given in the question? 8 lakh. Now as I said, equity, so we don't have any equity here, pakshe it is already known, because total capital is given here and the loan amount also given here. So taking the difference, you will get the total owned fund. Owned fund means equity fund. So 20 lakh is the equity, into 100 you get 40%. I hope this question is clear. If you're having any doubt, please do comment. I'll make a video on that. I hope today's topic is clear for you. So today's topic was on return on equity and return on investment, and we have discussed two questions related to return on equity, and in return on investment will be shown in the next video. Please do subscribe and like my channel. Thank you and have a nice day. Bye.